Friday, August 9th, market analysis. Stan Ehrlich, good morning. Almost 10 o'clock California time, and we have had some bullish engulfing ER buy signals yesterday in some indexes. They're the futures contract versions of the major indexes. Here we go. E-mini. Bullish engulfing yesterday. Turn my code, turn the price green. Small loss at the moment in the trade. Going very much sideways at the moment. Not a very convincing, but that really doesn't make any sense because this is an algorithm and you're not supposed to inject human intervention or commentary or thoughts, whatever, into this. So, got a bullish signal. We're long. Let's see if it works one way or the other. Now, my comments. I don't trust it much. I only think we're going to go up to 5,400, maybe 5430-ish. That'll give us some elbow room to make some money on the trades. That would be AR1 scalp, which has already come and gone yesterday. And I think it was a very tiny loss or a very small profit. I don't remember, but it's inconsequential one way or the other. But the overnight position showing the trade line right there is a small loss at the moment. No big deal. We'll see how it works out. The sideways movement this morning is interesting. After all this incredible volatility we've had for the last week and a half, which is huge compared to the many, many months before that, all of a sudden the market explodes with substantial volatility. And today took some sleeping pills. So sideways range, a minor new high, a little bit, a few minor new lows, lower lows since the session started, not much. And at the moment, we're up almost nothing, just a little tiny bit. But our trade line is red, and that means we have a little loss. And we bought it late in the day yesterday, and there is a small loss on the day trade scalp. I can see it right there. And on the overnight, you can see easily the big red line, and it goes from the entry price around the high of the rally yesterday to the current quote. So we'll see how it pans out. Now that's my trailing stop, which I can raise to risk a lot less by changing the kicker. That is changing the speed at which the trailing stop moves. This was our trailing stop for our scalp, which had very little time to make money yesterday, but the stop came up extremely sharply and quickly, which is supposed to for scalps, especially when there's very little time left at the end of the day. So no big deal. Now, Spider, daily, we didn't have the lower low, no signal. All it's doing, in my opinion, is to rally up to the neckline of this first shoulder high, June 20th, head and shoulder top. The top of the market was the head of the formation, of course, July 16th. And the last shoulder was a bearish engulfing, but not in overbought conditions, so therefore no red ER sell signal August 1st. Now, the pattern is working great. We don't want to rally up above the neckline, which at the moment is about 54, 55, 3, 5, 35. And we came fairly close, not a super, but that's fine. With a higher high today, I'd love to see it get below yesterday's lows, producing a big bearish engulfing. Probably not going to happen. It is Friday, and I'm relatively surprised that we're quiet. Usually Fridays are a little more volatile at the end of the week, sometimes before a 3-day weekend. People like to even up or not be exposed to risk on a few days of not being able to do anything about it. So we'll see what happens. Interesting situation at the moment. Now, SPY 1 minute chart, just plain sideways. And you can see what incredible volatility we had. Huge break, came back a little, gap lower, big break, closed a lot lower, huge gap down. At the moment, exhaustion gap down, opened on the lows. closed still a lot lower, but came up, closed the gap, and we're stuck at this resistance area at the moment. Next, QQQ. Now we've got a higher high, higher high, higher high all week long, and basically Monday has been the lowest low for these breaks, for this series of down moves. So this week we've climbed a little bit, relatively speaking, relative to the top of the market, which you're going to see in a minute. We picked the exact high day on two of the major indexes. So stay tuned for a moment or more. Now, I'm expecting maybe, I'm very skeptical about this, a rally of a little bit more. So far, yeah, Wednesday, Thursday, today is a little higher. We're stuck at the top of the resistance area, so I wouldn't be a damn bit surprised if this thing started to work its way lower today and through most of, if not every day, next week. Next, lower, of course, Qs. Same thing, just detail, 1 minute chart, stuck at a little resistance level here. Now, the top of the market contains a red bearish engulfing ER sell signal candle. Bingo, the high. All the way down to where we got a bullish one yesterday. But again, personal opinion, not a strategy trade. Strategy's long. We are a little higher on the day at the moment, up a very small amount. Things are going well as far as the strategy is concerned. My opinion is we don't have much elbow room on the upside. And at any moment, the damn thing could turn around and make new lows to the trend down. Now, my opinion is based on my experiences. The strategy is based on my experiences and the programming of those experiences. So my experiences are really commentary, ideas, and what I've lived through for 52 and a half years in this business since 1971. Now, that tells me don't trust this buy signal, but the buy signal is mechanical. We're long. We're looking for a little bit of a rally. In my opinion, I don't think this is anywhere near enough to justify a big move up. There's too many things here. The pattern, the way it topped out, the fact that it went up for a couple of years, a lot without any big corrections, and all that stuff is really not part of the strategy, the code, the algorithm. We're talking about two different things. Strategy's long, okay with it at the moment. Opinion, okay, a little rally, but then big time down. Let's hope that the strategy is able to capture some profit on this, what I expect to be a little rally and then big time down. And who knows, maybe we'll get a sell signal on the top of this rally. I kind of doubt that because we won't be very overbought. Next is the NASDAQ 5 minute chart. And you can see that it's kind of stuck in here. I've added this little trend line across the top, slightly upward slanted across the highs of most of this week, but we've got several points on the line. So it seems to be fairly relevant. As long as we don't break that line, we're not going up very fast. And it's susceptible to breaking down big time. We'll see what happens. I am bearish, but I'm toying with the idea of a little more rally or not. But still, rally or no rally, I'm expecting new lows for the trend maybe as soon as next week. YM, we got on the Dow futures, YM, the sell signal on the top of the market to the exact day. Not only that, but we got the high of the market back here on May 20th at the top of that rally and the beginning of the big break on April 1st this year. All three important highs this year have my bearish engulfing sell signal. Now we have had April 19th, the bottom with a buy signal. And guess what? Yesterday was another buy signal. Just because the green is larger does not mean it's good or bad or more powerful or going to do better or anything like that whatsoever. Simply, in oversold conditions with my custom relative strength and my custom bullish engulfing, which is not exactly the same as Steve Nissen's or the Japanese originally. Exact rules. Mine are slightly different, not much, nevertheless different. We've got a buy signal, and so far, okay. So is it going to do what this one did and rally a lot over a month? I hope not. I don't think so. I'm not expecting that. I think this is going to be short-lived and hopefully enough to make a little money with. Next, same thing, YM, 30-minute chart. I wanted to show you the broad range here we've had over a month or two and details on the way up and down and up and down. So we're kind of stuck in here for a few days this week around these highs. Remember, at any moment, I'm looking for a move down, and that would, I think, make probably a new low for the trend. Okay, Russell. Big historical resistance did stop the rally. It took it a few weeks. Back down, crash, big time, huge in 3 days. Now we're back into some support, oversold conditions, moving sideways to a little bit higher this week in the Russell, same as everything else. And the 1 minute chart's not going to show you anything more, but just simply detail bonds. Here is a longer term story. Now, it's a little complicated, but not bad. I think there's a chance that this low back in March 2nd of 23 is a shoulder low. I am not including the October low a little earlier than that, a few months earlier, yet. So if that's a shoulder low, and this is obviously in no way in hell going to be anything different than the head, with a bullish engulfing Europe buy signal at the bottom. Bingo, we got the bottom of this market, and we have many signals that are like this that have produced the beginning of moves that lasted months and months, if not years, and multiple. Obviously, that's an investor type of long-term hedge fund, hedge, whatever, long-term signal. Now, this is forming or formed a head and shoulder bottom. If I take this low, then you take it as the shoulder and you go here, how much time? You duplicate that time from here and you pick up that low right there. So these three lows are basically the last shoulder low. I think, not sure yet. It's going to take a couple, 3 months to prove it. But so far, the upside breakout has been classic. So far, so good. And that means if this pattern is correct, we're going to go up to 140 almost. Yeah, close enough. Very broad strokes here. But if we have some floundering about the interest rates changing up and down, et cetera, we could have a move down into approximately or exactly October. And that's why I have put this green circle here. It is not only just on top of the neckline of the pattern I just detailed, but it would correlate with the October lows I'm expecting in the stock market indexes again. You know that October lows, over 90% of the time, and since 1997, we had a turning point in October. You can't ignore it. You shouldn't ignore it. Historically, it is highly likely to happen again. Free money, easy money. The story in bonds, if we zigzag our way sideways to lower slowly for a couple months and do, I hope, I think, have a low in here in the circle and then move up, then you have a much more bullish, bigger head and shoulder bottom, and it would correlate with this October low back here for 2022, the bottom of the market, of course, October of 2023, and again, maybe 2 months from now, the October low down here. Not the greatest pattern I've ever seen. Might even be a little lower than that low, but I'm thinking that's probably a little too low. But this certainly, timing-wise, price-wise, looks plausible. And then if that's true, my neckline would change from where it is right now to up here, and the bullish engulfing would be, I'm sorry, the upside objective would be substantially higher, which I don't doubt in the slightest bit. So putting my neckline back to where it was a moment ago, right in here, is working fine so far. And I should have dropped it a little bit. That's about right. It was at the bottom of the green. So I like what I see for a variety of reasons. I'm bullish in interest rate futures, but it might take a couple of months of fiddling around to go a little bit lower before a huge bull market, bigger than my minimum objective right now of 140, will probably, I think, ensue. Notes, exactly the same thing. I don't have to go through the story again. Pattern, timing, just the numbers are different. Crude, almost got oversold, in a little bit of support, almost touched a bullish trend line across the bottom, which turns out to be the bottom of a large pennant formation. We're finding ourselves kind of between a rock and a hard spot. I'm going to wait a little bit for this to have some signals and or break out or give me some material to work with. Right now, it could rally back up to 79 and maybe the bear trend line 81.5. But I don't know. It could bounce around in here. Next, natural gas, oversold. Unfortunately, no signal at the bottom. We don't always get signals. And I'm expecting a little bit more rally. But the major trend is certainly down big time. And I'm looking for lower levels over time. This chart looks a little bit like the grain markets in general, where they just couldn't rally much, didn't hold, made new lows for a long period of time. And that's exactly what natural gas has been doing. Okay, next. Support level bounced off of, got oversold, classic combination, said so at the time, August 5th. I don't think the rally is going to go far. A little difficult to tell, but I think the minimum upside objective in its very small 2.45. It might even bounce a little bit more, but this looks like it's going to fail any point along in here. Soon, in a week, maybe a little higher, and then new lows. I'm bearish. Next, gold. And when I can come up with exact numbers and timing points, I certainly do, and you know it. Gold is a big sideways trading range. We've had a bullish resistance line develop because it's bullish, it's upward slanted, resistance because we're trading below it. Normally, when you draw a bullish trend line, it's underneath prices, but this is trading underneath the bull line, uptrending line, so it's called a resistance line. Now, a little higher today, nice, nothing going on of any consequence. I don't know, maybe rally up to this resistance line. At any point, it could turn back down and come back to the support level. Comment, if the support level at 2351 is broken, and I do think that's going to happen, might take a couple of weeks, then the downside objective is all the way down to 2177 or lower. Next, silver and platinum, pay attention. Head and shoulder top, my favorite pattern. First shoulder, April 12th. Top of the market, a little before and after, around May 23rd. A little tiny double top, sort of, but that's the head of the formation. The last shoulder is by itself a small head and shoulder top, and that was July 11th. It worked within 2 days after the breakout. But the breakout caused the neckline on the bigger pattern, the blue line here, baby blue, to be broken. And our downside objective is 24 and a few ticks. Yesterday, we had a bullish engulfing buy signal. So now I'm looking for a short-term rally. At the moment, we've got a small profit on the ER1 overnight trade. ER1 scalp, I'm not sure that I've got it showing. Probably made a little money because the close was above the high the previous day. ER1 overnight, I am showing. Stop is coming up pretty quickly and nice. Looks like we may have even taken a profit on a dip earlier today, the next day after this. We're nowhere near ER3s, which would be around the middle of yesterday's range. We do have 2 more days to get filled around the middle of yesterday's range for an ER3 scalp and overnight, but we don't always get a dip to get the ER3s filled. So bullish because of the signal. Easily, I can look for something up around, I don't know, 28.40, 29, even 29.30. And I can't even rule out a bigger rally toward the neckline. But the minimum downside objective is still in force, 24. And I'm looking for that longer term. Platinum, the whole story is repeated exactly. Dates may change slightly. But this time we got a bearish engulfing in the damn top of the market on May 20th. And I told you the day it happened that we had a sell signal. Now, unless it happened after my YouTube recording, which sometimes, then I mention it, then I not mention it, pointed out and emphatically the next day. Now, minimum downside objective, let's call it 807. We've already come down approximately halfway, maybe a little less. But because of the support area, we're bouncing slightly. I don't trust the bounce. I don't think it's going to go very far, and I am looking for a lot lower. Next, high-grade copper. Oversold, trying to bounce, rather feebly so far. Don't trust any rally. Don't think it's going to go very far. And I expect to see lower lows, within a week or two, after maybe a little bit of a bounce. It is a fairly significant support area. Probably should drag this back to around here. And yeah, I like it for a small, short term, a week or so, maybe less bounce. Now, the poor grain markets don't have a chance. I'm sorry. Every day I talk about this for the last month or two, I simply say long-term bear trend, not oversold at the moment. We are in need of some sort of a bullish formation to cause a bull market in grains. Meantime, it's going to go lower. It has gone lower. I've said so. I don't see anything stopping it yet. Looking for lower levels in beans, oil, meal, corn, and wheat. Now, wheat is a minor difference momentarily. We'll get to that in a moment. I don't know what the downside objective is here. If you're short, just keep a sensible trailing downside stop, occasionally lowering it for your personal reasons, but don't let it stay stagnant when your profits are mounting and you want to lock in more profit. Next, oil, soybean oil, rallying back up resistance. Today it hits it almost exactly. I have no faith in this as far as bull moves are concerned, as I've mentioned. I think it could turn around today. We might see a little bit more of a rally up to 44.22. 42.30 at the high today, 42.60. I don't know. Anytime this could turn into new lows, and I think it's going to happen next week. Meal, soybean meal, diving here. Great. I wanted to see that. I mentioned the August soybean meal on August 6th, Monday of this, that was Monday, Tuesday of this week, had a bearish engulfing. Today, no, on August 6th, the September contract did not have a bearish engulfing, but it did get overbought in a resistance area, and we get down, down, down. I think my minimum downside objective I've been talking about since June, May, May probably, is about to get reached next week. Then lower still, below 300, below 290, and then even lower. Corn. We had a bullish engulfing. It did not work. We ended up with a very small loss. Apparently 88 down to 80, about a penny or two. Good try. No hard feelings. lost 2 cents. Hopefully it would have worked better. It didn't. That one didn't either. New lows, not quite oversold yet, in a support area. So maybe we'll come down to 365, the bottom of support, and then get oversold and turn up. How much? Well, the best I can do. 425, 426. That's the best I can do. It's got a huge amount of resistance starting at that level. And if I get really deeply oversold, then that's not out of the question. And it's 50 cents higher, which is pretty darn good from here. But that's the best I can do. Wheat. We had a buy signal on July 31st. So far, almost the lowest low for the trend, only missing by a couple of pennies. We are still long wheat. I changed the kicker this morning to raise my protective sell stop faster than what the default is. And now it is protecting a profit and well below today's low and even below yesterday's low, which is the day before. So it's got a little support there. Good. And if it's hit, I make money. You always want to try to limit your losses and let your profits run as best you can. Easy to say, extremely difficult to do. Next, cattle. Brand new today, right now. Bullish engulfing, looks pretty good, but that's an opinion. Lower than yesterday's lows, a fact. Oversold in my custom RSI, a fact. And an outside up day, a fact. So, signal. Into a little resistance. I don't think that's going to stop it. We just got the signal today. So now I'm looking for another move up to at least 184.5 and maybe testing the highs of this move. I like what I see for the rally, but generally it's got a double top. Big problem. We've already broken out of it to the downside, period. We've already gone down about, 70-80% of the move down. It's expected to get down to 174, and we got down to 176 already. Is this bullish engulfing going to move up, cause the market to move up a lot or a little, or maybe not at all? Because my objective on the pattern is still lower. We'll see. Next, we have a head and shoulder bottom formation in hogs. I still like it. Yesterday, I started abandoning the idea, but I did mention that there was a downside gap, maybe exhaustion, needs to come up and close the gap, and that happened the next day today. That's done. But if we stay here and manage to continue to rally, the low yesterday is not too far off of the mark, 2 days late, and not too much lower to change the overall pattern. Now, the neckline never changed because those 2 points are cast in stone at this point. It's whether we form a last shoulder low or not. That's the question. And after that, is it really going to work correctly? So this is about the lowest I can expect it. Plus, it's ruining the pattern, going sideways too much time. So this low damn well better work, or the whole thing just falls apart. Assuming it works, our upside objective is up here, 89.5. Interesting. Right smack at a previous top of the market back in April. And we had a bearish engulfing ER sell signal on the high day, April 9th, that started this whole move down. And now a head and shoulder bottom, maybe. Totally hinges on whether this last shoulder is going to turn out good or not. Back to the E-mini. Doing okay, high and last, coming up a little. I really want to eke out some sort of profit on this trade, which is a green trade line now, making minor new highs, but basically back up against a resistance line. I forgot which chart I drew that on. Here it is, NASDAQ, short-term, 5-minute, and it's got a little bit more to go up to test that line. You guys have a profitable trading day, profitable trading to you, and it is the weekend. Have a great weekend.